Well, if you are SoftBank, it is pretty convenient that ARM is going up. After the debacle that was WeWork, we are going over a ton of stuff today. We got Uranium on the agenda, all that. House is an expert in, so we're going to hear what he has to say on that. Plus, we're going over some of the jobs data, along with some Bitcoin price, which has been very interesting for the past 2 days. All that and much more in today's episode of Money Never Sleeps. Welcome back to Money Never Sleeps. I'm joined here with Mr. House today, good friend of mine. No J Webb, he's still out of town. But before we get into anything, just a reminder that nothing we say is financial advice. We are not financial advisors. We're just a couple of guys who love talking about the market, calling bullshit on some terrible CNBC analysts. I'm just kidding. That's a joke there. But yeah, we do your own research before you make any financial decisions. House, glad to have you here today. How are we doing? Anything in the market that's sparking your interest? I know there's a lot that we could be talking about. It's fun times, isn't it?
Well, I mean, I think you definitely already mentioned the thing that's sparking my interest, the most as of recent, which is uranium. I had met a friend, and he very quickly green pilled me into spicy rocks, and now I can't get enough uranium. But no, so definitely excited to dive into that a little bit today.
Yeah, absolutely. And I have very little knowledge on it, and I'm not sure if anyone else is as well versed as you are in it. So we're going to see if we are believers of uranium after that. But I do want to go into some of the information that we got today. Obviously, we got some jobless claims data. We also got some news out of China last night, along with a very, very, very questionable pump out of ARM. And again, you guys know how I feel about SoftBank and some of these other companies. We'll get into that when we get into it. But I want to start with the jobless claims because, once again, this is something that we just have to question. I think that's kind of the message today. Question everything, right? It's not that we don't always, but some of the stuff I am just never convinced. I'm sorry. I just can never be convinced that things are as they seem. So pulling up, this is the jobs data for this week, and we're seeing jobless claims, how they ended week over week. You can see that we had in seasonally adjusted a pretty good drop. We had about change in 9,000 positions. We also got in non seasonally adjusted, even bigger drop, 31,000 positions, right? So that's a pretty big move just week over week. And now, if we look to down here, the week endings, we're seeing that's total. It's about a difference of negative 44,000 for non seasonally adjusted and a negative 23,000 for seasonally adjusted, right? And I think the thing that a lot of people are questioning, and myself included, is how the data kind of doesn't set up with the narrative that we're seeing everywhere. And again, we've had over 100,000 jobs cut in January, and we're seeing that the claims are going down. Usually, you would see initial claims being going up, and continuing claims stay relatively high, and we're seeing the numbers go down. Will these be revised? I think most of the data that we're getting recently is probably going to be revised significantly. But if there is any ulterior motive, and again, this is just speculation of why these numbers need to be good, it doesn't necessarily change the fact that the economy is in a very different place than where the numbers and the data are saying that it necessarily is, right? We're getting data outside of the US that is telling us one thing, and then we're getting data like this that's just very complicated to understand how hours worked can go down, employment can go up, but at the same time people be getting raises. What's the point of getting a raise if the hours worked is going down across the board, right? That doesn't make a lot of sense. And the same thing is this: unemployment has been pretty much on a tear since the earnings season, and at least layoffs, and we're seeing the initial claims, which should be relatively stable or going up, going down. So there's a lot to dig into this and see what we are thinking about this. But I don't know. I question a lot of this data that we're getting recently. It seems like it's not in a way that is coming across as believable. That would be my concern. I think it's going to be revised. It just doesn't make a lot of sense with what we're getting outside of this type of data from the BLS and other organizations.
Yeah, no, I think that makes sense. And I can't remember if it was one of your tweets or a text that you sent to JWeb and I. But yeah, it doesn't make sense that you're getting increased private sector layoffs, but unemployment's going down, right? Like it's kind of confusing. I think the only way I can rationalize something like that in my mind is that people are either anticipating being laid off and getting jobs lined up, or they're just being super proactive. And as soon as they're losing their job, they're going and finding another one. But my question to that would be, what are the jobs that they're getting, right? Like, are these quality jobs that can sustain their lifestyle, or is this more along the thought process of, I need to work here until I can find a job that can actually pay for my lifestyle, right? And then, like, what does it look like when you can't find that job? So I think there's a lot of like weird unknowns in between that, and I think it's curious to look at now, and I'll be interested to see how it actually plays out.
Yeah, absolutely. And seasonality kind of plays into a, an effect. I don't like seasonality. I generally think it's a stupid metric. I'd rather just see exactly what the jobs data is, whether what month, time of the year it is, any of that. I think it's just a very dumb metric that kind of is used for narratives as opposed to seeing where the actual job market is. But that's a great point too, right? How many of these positions are full time? How many of these positions are part time, right? And again, these openings can close if people need more money. They could find a job part time, and they could say, "Hey, there's a job that's gone." Right? It's kind of the thing that you have to keep an eye on as well. But it just is, it's something that you're going to have to keep an eye on. But I don't necessarily think that labor data is going to be the end all be all when it comes to is the economy slowing to a halt. Right? I think if people are losing their jobs in the private sector, there's other things that are going to prove that the unemployment rate's probably a lot higher than maybe being reported, or the data is a little bit skewed. Probably demand is going to be the number one thing. You're going to see a lot of people spending less money, and that kind of goes into some of the data that we got yesterday. I'm going to pull this up from Zero Hedge. It was a tweet, but it's talking about consumer credit. I think a lot of people, including Steve Eisman, were saying that consumer credit is not in a bad place. I disagree. 1.6 billion as opposed to the last report, which is 23.5 billion, and they were expecting 15.9 billion. So there's a few things that can possibly be right. You'd say that maybe people are maxed out on the credit cards. That's one situation you could say. You could say that two, people are willingly trying not to spend more. And that's kind of showing you that demand is coming down. And that might be part of the reason why people are afraid to spend. That could be that deflationary thing that brings us down to the Fed's 2% goal. Or the other thing is everyone's making bad stuff. I don't buy that one. That's a joke. But I think that more or less it's a mixture of maxed out credit cards or that's just piling up. And then also just people that are trying not to spend as much, not trying to get as much debt. Again, these credit card rates are extremely high right now because of the federal funds rate as well. I mean, that impacts all your spending. The other thing too that kind of goes back with what you said about the jobs is that a lot of people, if we look at the data, if we want to believe parts of the data, cherry pick some of it, a lot of people are not quitting as much as they once were back in 2020, 2021. So that tells me that people are trying to hang on to any position right now to make sure that they have stable income coming in. Maybe that's part of the reason why the jobless claims are going down. People are trying to get those second jobs and whatnot. But it's very interesting when you see that paired with consumer credit. It shows that consumers are spending less, and it shows that there is definitely a demand issue um, that is going to be coming to the U.S. economy. So that's what we got on that front. Let's just go right into China too, because this is really interesting. We're just talking about all demand. And if we're seeing global demand here and people spending less in the United States, who is our number one exporter or was our number one exporter? Or we imported goods from, it was China, right? So the thing about China now is that they're starting to see even worse deflation. You know, China's consumer prices suffer the biggest fall since 2009 as deflation risks stock economy. I think it's even worse than that. Stock is a pretty interesting thing to describe it. I think it's something that they are absolutely experiencing, right? It's not something that's worrying the economy. When unemployment rates really high, they're not reporting it. Kind of questionable whether they're in a recession or not. That's just kind of the thing that we're seeing. But just in the summary of this article, which is pretty interesting, it says deflationary pressures persist. Food prices are the major drag. That's not necessarily a great thing to see, especially in this time of year. This is a huge holiday for China, the Lunar New Year. And I was looking at, I think it was chicken and pork prices, which are obviously two of the big proteins, part of a lot of food over in China. They're down significantly. There's actually the government buying pork to keep up the price for a lot of farmers in China. So that's very interesting to see because that shows you that people just aren't buying. It's not that they don't want to eat; it's just that a lot of people don't have the cash, right? And I think that kind of plays into the bigger problem. The bigger narrative, deflation means that there's a lot of money leaving the monetary system, and that causes a lot of these big binds and these and these crunches when it comes to credit, and it also comes to collateral and cash shortages. But consumer and producer prices both registered annual declines. We knew that already. Analysts urge more strong policy support to revive confidence. Some warn deflation could become entrenched in consumers. Now, this is really interesting. It's like problematic here too. Analysts urge strong policy support to support confidence to revive confidence in China. The problem is that yes, there is a problem in China, but there's also a problem in the world right now entirely. And that's the issue for China. If they are not getting orders, there's no one in the factories to be making any products that they can eventually ship out to export to other countries. And that's just going to continue to hurt their economy. It's going to cause people not to have as much money. They're going to get laid off. They're not going to be able to purchase some of these goods that they once were, right? I think they're going to be eating probably not whatever they can essentially afford. So it's going to be interesting to see that. But even down here, when we look at this is the CPI chart from it's the fall within the past 14 years. So we can see that 2009, obviously the great financial crisis, and to where we are today. Obviously, we haven't been inverted since 2021, which we quickly bounced out of. That was because of stimulus. And we can see back in 2009, that's when we were below this black line. We were back underneath in the negative 0.8% year over year change from where we were the prior year. And you can see that producer price index has been dropping significantly too, right? It's rebounded a little bit since 2023. However, this continues to go down. This is going to fall right with it. It's going to be interesting to see how China reacts. They're the first one that's finally showing signs that there's really big problems in the economy. And again, I'm talking about the global economy. And right now, I think people are underestimating how strong this problem in China is going to be for the rest of the world, right? I'm not convinced things change fast. I think the biggest problem right now are definitely the rates in China. They have to cut rates. It's going to cause more problems in the short term, but eventually it's going to allow for everything to be rebuilt and, pretty much allow this shortage of cash and collateral that we have to go through the system and eventually be rebuilt to the point where, okay, now banks can create more debt, more money circulating in the economy. 2 to 3 years from now, everything's going to be in a lot better place than it currently is.
Yeah, no, I think that's a good cover, and kind of segueing into one of our upcoming topics, because I know one of their parent organizations is SoftBank Group. Is ARM only on the NASDAQ, or are they also traded on the Hang Seng or another Chinese exchange?
I'm not actually sure. Let's pull it up and see if we can see that. But let's see. Pull up the euro. I got the euro chart up here. But let's look at ARM Holdings. So they got them on. Does not look like. I think ARM is not on any of those indexes. The Hang Seng or the Shanghai Composite or anything like that. Or what's the other one? The Nikkei or anything? It looks like it's just in Europe and North America. I'd be interested to see. I think SoftBank itself. Let's see, SoftBank. There's so many different tickers for SoftBank. Just looking for the Japanese one. Here it is. Yeah, I can see this one wicked up. But I think if anything, ARM exposure is going to be traded through SoftBank in Asia, whether it's the Nikkei or the Tokyo Stock Exchange. But yeah, interesting stuff out of ARM, right, man? That was something that I text you and JWeb in the group chat. And I'm like, just look at this fucking chart. This is such a joke. But yeah, they reported strong earnings and their outlook was raised. And guess what? Who owns 90% of ARM? Well, it's SoftBank. Who else did ARM have exposure to? WeWork. So it's just really convenient considering 4 or 5 months ago they had a huge hit to their to their portfolio. And next thing you know, hey, this thing's up 50% as we speak. It was up even higher this morning. Let's see what we're wicked up from.
Yeah, I'd imagine that was probably a fairly strategic move on SoftBank's part, that they were probably pushing for ARM's IPO when it was coming, seeing how poorly WeWork did, the craze around NVIDIA and AMD, you gotta get in that competition lane. So I think, it's probably a circumstance of good strategy and timing to offset some of those other losses.
Yeah, and here's my thing, man. And again, it says ARM shares surged 60% after SoftBank controlled chip designers issue strong forecast. Sure, sure, right. Everyone's gonna say that they have a strong forecast. If they didn't, they would be fucked. But that's just the name of the game. I don't
I
hate them
think
for
though, I think the difference here though, right, is they're in the tailwinds of Nvidia smashing all-time high after all-time high. And so I think it's almost that FOMO and fear of missing out factor of, we saw AMD in 2016 and 2017. We saw Nvidia recently. It's already what did it IPO'd around like $60 for
yeah.
and traded down, I want to say maybe low to 45, 50 range. So, had a high IPO. It's already above 100. I mean, it's probably a good amount of they're in, one of those sectors where there's going to be a demand for semiconductors and those chips, even as the supply diminishes. So you've got that, deflation of supply, inflation of price, and then you're just looking at all these other chip companies' success. So I feel like you're going to get, a mixture of people who saw value after the initial dip, and then now you just get retail flooding in trying to get that sweet sweet chip money.
Yeah, man, I completely agree. It seems like we have the Mag 7 and then we have semiconductors, right? That entire market has been doing very well. I'm not going to shit on any of them. I do think, and I will say, Nvidia and ARM kind of remind me. I will, I will not say because it's not true that they are the Enron or WorldCom, right? They're adjacent to the point where it's like sometimes something can always be too good to be true. I think that's a very reasonable statement to make about both of those companies. But when I look at this, and we do know SoftBank isn't necessarily um, in the greatest position right now. I think there's a lot of problems there. I think they definitely had more liabilities than assets on hand, and that definitely impacted their actual worth despite their market cap. It's really interesting if you break down the numbers. I can't remember who it is. I think it's just Dario on Twitter. He does a really good job of breaking it down. I'll tweet it out later, but he pretty much tells you like, all right, this is what SoftBank is actually worth compared to all their liabilities and assets and losses and all that. And he's like, yeah, they're negative right now. So I think it's interesting seeing that. I don't know necessarily know if that's true or not, but just seeing the breakdown of that, that's not something you're going to see anywhere else. But the thing
Yeah.
when I get to these with ARM is there is a stock unlock that comes out March 12th. Who owns 90% of this stock? SoftBank. And so you have to question yourself. It's like you said, was it strategic? 100%, right? I think it's very smart of them. Now, do I think they're a company that should be around after how bad it's been for the past in recent history, things that they've done? I'm not going to make a judgment on that. However, if something were to happen to SoftBank, say they were insolvent, like some of these Twitter accounts say, or they just are absolutely their trading, their margin account just blows up because they're trying to save the ship, then guess what? I think the company might go down, but everyone will be fine. Very similar to 2008, right? There's a lot of money for to be made off of some of these stock unlocks, and the fact that they own such a huge percentage of the market cap. It's very interesting. It's very scary at the same time, but I have a funny feeling. March 11th, bank term funding program ends. March 12th, the stock unlocks. If they need capital and they need cash, collateral, any of that stuff, there's a good chance that in the weeks and months to come, ARM would be the one to see a lot of outflows. And I think that SoftBank would try and save ship at that point. I know you're a huge fan of margin call, as I am.
Yeah.
Sell everything so we may survive. That type of mentality. I think that might not be something out of the realm of possibility. We could see out of companies that maybe not arm, maybe not too far off from how they're situated in terms of capital and their liabilities and assets. So that's all I have pretty much to say on ARM. I do want to look at the chart real quick and then we can move on to Bitcoin because Bitcoin, what's going on over there? Wild shit, but at least it's moving, right? I'm not upset. But yeah, you have this massive gap up here, and this is hate it. I hate seeing gap ups like this because there's no support below, right? And we know that semiconductors are pretty much on the same type of war path, just to the upside, but they haven't built necessarily a lot of support on the way down. So that's very concerning, especially with what we know is going on in the banking system. We'll take a look at that after we get into uranium. But this is a huge gap, getting pretty close to overbought on the daily. I'm just going to put this line here when the stock unlock happens, and then we could come back, you and me, or you, me, Jay Webb, or someone can come back and see where this ends up. But that orange line is when the stock gets unlocked. As we know with IPOs, you can see that right here. That's where it launched. Pretty good for IPO so far, but if we look at, say, something like Meta, go back in time a little bit here. That's how you IPO, right? You IPO, comes out, stock sells off, you buy shares at the bottom, and then you wait 10 years until the stock gets to $400 a share. So that's kind of that's the right mentality. This, more than anything, IPOing at the top of a market, that just screams like, hey, this is a pretty good chance to make some money here, and maybe solve some problems that we are definitely seeing. But I think that's enough on ARM. I got nothing else to say. If you want to add anything, feel free
No,
to.
that's about it.
Yeah, let's get into Bitcoin, because this is an area that you and I both watch pretty consistently, especially because you and I are degenerates who love trading with 10x margin. I'm just kidding. We never do that. We're not that crazy, guys. But we like to see how the price is reacting, because it's really interesting to see. It's pretty predictable sometimes when you're watching this, and I think I've been doing the counts on this, and I'm kind of torn, right? Bitcoin obviously having a really good 2 days. Yesterday up 2.9%, today up 2.5%. It's $1,100 both days. The question is the structure over, or do we have a little bit more room to the upside? I have my answer. I'm curious to see what you have to say. So I'll let you take it away first, and then see if you're seeing the same thing I am.
Yeah, so what I'm kind of looking at right now is we're at a pretty big point of resistance as far as Bitcoin, right around this 45 range. And something that I've noticed, and Will Clemente from Reflexivity Research had pointed out, is we've essentially returned to where we were pre-Bitcoin ETF. So it does kind of align with that resistance range. So I think, there's a potential we shoot up. If we shoot up, we maybe retest 49K again. Maybe we tap 50K. At which point I think we'll likely go down heading into the halving. So that's kind of what I'm seeing. But I could also see, we don't get up to that 49K, 50K mark. I could see us going down into like the 38K range for a little bit, maybe meet some support, kind of where we've seen it hold as it's been pumping up. So, 43.5, 42K, 40K, 38K, and then probably just slowly taper down leading into the halving. That's kind of what I'm looking at right now.
Yeah, absolutely. I completely agree with you. And it's a matter of time, right? And that's why I haven't been covering Bitcoin, I think, as much as we usually do. It's because we have to kind of see what happens and what plays out, because the structures right now are definitely corrective, I think, especially after seeing that big dump that we got from 49K down to 37 or so. But this structure here is very interesting. I'm looking at this on the short time frames. I'm looking at this on the 4 hourly. Like, I look at this, I'm like, yeah, it's three waves, but is it? You know what I mean? It's
Mm-hmm.
very hard to say definitively, because we didn't get a good enough, I think, B wave in this move to the downside. So if people are watching, I think this is our wave A. I would anticipate this would be our wave B, but that means it's down here. And then that means we have a really good, so our B wave is really shallow, right? And I don't know if that's by design, or maybe I'm just missing something. This is actually part of a bigger structure that could take us up to 50K, or 49K, 50K range, right?
Mm-hmm.
So I'm really interested in seeing how that plays out. Is a double top possible? Yes. I think that's more, I would say that's more unorganic and more manipulative if we do get up there than it would be if we put in a lower high. I think the lower high is more of the sentiment of, okay, now we're starting a new trend. If we do a double top, that's just kind of distribution, liquidity, getting money out so that we can sell a little bit from a higher position. Now, the interesting thing is a lot of people are saying the inflows from the Bitcoin ETFs are coming back. And I think that's kind of a narrative that people are getting excited about, because if we look at some of the ETFs, they've had a pretty good few hours there bouncing back from, and we pull up the daily. The dailies are looking pretty good, right? They're bouncing back from just nonstop selling recently, and they're all pretty similar, all very similar, actually. So they're tracking the price of Bitcoin fairly well. However, I think the narrative that's these ETFs are coming back, the ETFs aren't Bitcoin. I think you're at better exposure to Bitcoin if you just hold Bitcoin. That's not financial advice. It's just, personal opinion. I think that with what we're seeing here and how volatile Bitcoin could be in the next few weeks, and you mentioned the halving, probably seeing that retracement. There's a good chance that those things are going to gap down come the trading mornings, and that was something we talked about, and that's kind of scary, especially when we think of the outflows, because again, that's is when you look at ETFs, that's not crypto, that's TradFi 100%. I'll fight anyone to the death that says otherwise, but I'm just kidding. But yeah, looking at this here, I think we're still in this massive ABC corrective pattern. We want confirmation that we're in the C wave, right? I think that's key. We either are in the C wave, or if we get to that double top, that indicates, okay, maybe the C wave is ready to start. And I think this is going to last about a year. I genuinely think that we are going to see Bitcoin possibly bottom out in this bear market if this pattern does play out somewhere around February or March of 2025. That's I think that's kind of the way it's been. We had a year up, a year down, year up, now probably a year down. So it's a 3-year, corrective pattern that we're seeing. But yeah, I think that if we don't get up above here, and this is just a ABC corrective pattern, and this is our wave 2 of this 5 waves down, then I think our wave 3 is coming down pretty low. I think we'll probably break through this 200 EMA on the daily. We might retest it on our wave 4, but I do think our wave 5 will probably take us down somewhere, maybe sub 30K, maybe around 28, 29K, which is something that we talked about before, around the same place where we rallied from back in the late October, mania from Tether Prince and just Bitcoin ETF speculation. By the way, that was 2.5 months before we even got the ETF. So for people that are getting excited about the ETFs again, just remember how much time played in between then. And then, you might be able to see Bitcoin in that price range not too far in the distant future. It is bringing Bitcoin dominance up, though. We're at 53.12. Question is, are alts going to rally with it? I don't necessarily know. I think that if Bitcoin does dump, there could be a rotation of capital into alts that could do a small little rally. I still think it's possible. However, as time passes, these structures do change. So I wouldn't necessarily bank on the fact that we are going to see an alt season rally just as easily because capital is rotating. I think there's a lot of headwinds coming in March. And that just everything is lining up for some issues of liquidity in the system that could definitely negate some of these structures. Things could change on the micro real quick. So that's all I got for crypto right now. I think we should talk about uranium, and I'm going to let you take this away. I don't know any of the tickers or symbols. I've just been trying to, following what you've been saying. But if there's any that I need to pull up, let me know. We could go right through them.
Yeah, so I guess I'll preface and add some context by saying, so when most people think of uranium, they think of what's referred to as yellow cake uranium or yellow cake PLC, which is enriched uranium, right? So that's what is used for nuclear warheads, as well as various isotopes for nuclear fission and clean energy processes. Now, the commodity form of uranium that's frequently traded is uranium 308, which is a uranium compound. It's like 3 parts uranium, 8 parts oxygen, or something like that. And it's one of the more stable compounds of uranium. So since it comes in a solid form and is mined, slightly less radioactive than less stable isotopes, that's generally what gets traded. And the reason I got interested in it is I met someone who's become a friend, and they started a tokenized uranium. So they're working with a company called, I believe, Madison Metals. That's their kind of partner company, and they've tokenized several million pounds of uranium 308. And their kind of goal is to use it as an arbitrage opportunity for traditional uranium markets, as the market is very inefficient. Because there's only a handful of people that have the facilities, capital, etc., to trade uranium. So this is, it's pretty interesting. But the uranium market has actually been blowing up in the last year in particular.
No pun intended.
Yeah, pun actually unintended, but it works really well. So if you want to pull up the chart, I think it should just be UXC uranium 308 futures.
UXC 308. Oh, there you are. Gotcha. Let me pull this up. I'm always bad.
I throw it on the weekly because there are a lot of gaps in the hourly and daily. And I guess this comes down to a lot of the trading is private contracts that then get made public after the fact. So that the data is kind of interesting. But yeah, essentially it's up to its nearly all-time high, and I think it's 16-year all-time high. It touched 106 and it's been moving up and down since, but this is coming after a matter of a few things. The first is the past few years specifically, a lot of countries have been revisiting clean energy and more sustainable forms of energy than oil and gas, because we've been beating the hell out of those supplies, and then also the geopolitical tensions that arise as a result of oil and gas, which isn't outside of the uranium market as well. So I think the three primary countries that uranium deposits are found in are Canada, so kind of friendly, Namibia in Africa, and then we have Russia, so not friendly, right? And then not just Russia, but you also have some of those Caucasus states and Central Asian states like Kazakhstan. And Kazakhstan's interesting because recently the world's largest uranium producer, who's located there, Kazatomprom, they basically said they've been really struggling to raise their uranium output, and they're probably going to have to shut that down, or at least dumb those numbers down a lot. And then also, the U.S. House of Representatives has introduced a bill to prohibit the import of Russian uranium. Well, that has a lot of effects. So, I think that the key two things are the movement towards clean energy, as well as, it's a very hard to find, extract, and handle resource, as far as, not every country has uranium deposits, right? And then everything that comes into that. So, I think it's just been on an absolute wild ride. I'd always been kind of fascinated with it, but never really looked at it from the trading perspective. But yeah, I mean, there's been a lot going on within the market. I want to say in January it went up like 19% in the month alone. So yeah, I'll kind of stop there and see if you have any questions or anything to make it less about just show and tell uranium.
No, I mean, that's absolutely amazing. I'm glad you brought up the actual reasons for why it's probably going up. And obviously those are two important ones. And as soon as you said that Russia is also part of one of the three countries that have it, it makes a lot of sense why, there's going to be a lot more demand for it as well, right? This is I mean, looking at this chart, it's almost really interesting. 2008, right? 2008 to where we are currently. It's almost like a full trip, all the way back. Um, the question is I have, and this is more technical looking at this, it's like, is the demand for this going to be significant enough where getting in now is going to be beneficial, or is there going to be a correction? You know what I mean? I think that's because
Yeah,
it's been on a tear recently. It's like,
I
I
mean,
would love to get into it, but
I think part of that, I think, and this is something I can look into a little bit more. I think over the next few years, demand is expected to rise, especially as a result of these geopolitical issues. So not just the war in Russia and Ukraine and Kazatomprom, not mining as much uranium, being able to extract as much, but we look at, I think my buddy Cody was saying, and honestly, he might be open to coming on the show, and he's much more well versed in uranium than I am. But he was saying, I believe in Canada there are more restrictions around mining it. Namibia is an unstable country located in Africa, where the Russian Wagner Group is rapidly deploying its forces across, not necessarily in Namibia. And then, in that Russian and Central, Asian area, you're not going to see a lot of people importing out as a result of just Russian tensions with the West, and also the Kazatomprom mining issue. So I think, in short, yes, as a result of the various geopolitical issues that are also driving up the price of oil, um, although not necessarily the Middle Eastern situation. I think it's more of the Russia, US, China dynamic that'll influence the price of uranium, and just clean energy, right? If there becomes a larger demand for modular nuclear reactors, right, that don't have a large footprint, but it's more so, it's for a cluster of towns or a single town, 10,000, 30,000 people. And as we get more open towards the idea of that energy and see it in practice, I think that's what's going to be driving that demand. But I think, as in regard to like market cycles, I don't know that we've seen an open market for uranium long enough to kind of look and compare as far as like traditional cycles for other commodities or equities or securities.
Yeah, absolutely. I think that's a great rundown of that too. Um, Other thing too, I'm looking at this and I'm like, obviously this year's an election year, right? I think there's two very different scenarios that can play out depending on who ends up in office too, right? I think there's a good chance where uranium could actually do extremely well if we get, another reelection here. I think it just seems like there's more likely that there is going to be that type of demand for it regardless. Tensions seem fairly elevated for the time being, whether it's accurate or not. Right? Again, we don't really necessarily know what's going on outside of where we're living for the most part. But I'm interested to see how 20 almost at 2016 fuck 8 years later 2024 is going to impact the price of this going forward, right? Because I could see a situation where say Trump ends up getting elected, and again, I don't necessarily know if he's going to or not. I could definitely see some of the tensions globally coming down a little bit. I think it'd be more similar to what we saw back in 2016 to 2020. But at the same time, I think the demand for this in the United States or in other places might drop because that type of renewable energy as well, right? I don't think the
Mhm.
focus won't be as much on as that as it would be if it were someone maybe more progressive. But at the same time, does that impact our relations with some of these other countries, which we currently have some standing conflict with?
Yeah, I would agree with that for the most part. I think my one challenge would be that it's more of a tangled web than just the geopolitical relationship, right? It's within that we also have Kazatomprom doesn't have the resources to keep up with demand and they're falling behind, right? So I think and also, yes, like Trump and Putin did have a good rapport during his last presidency, but I would wonder, right, is that on his list of priorities of everything else? Like, where does that stack rank?
Right.
And also, is that something that Putin's willing to negotiate on compared to other things? Because, when those two sit down at the table, you really never know what's going to come out of it.
No, right. It'll be too bad we didn't have Tucker Carlson having a three-way conversation with those guys. That'd
I
break the internet.
saw some rumor, speaking of Tucker, I saw
Yeah.
some rumor that he maybe like the government is considering charging him with espionage or something. Granted, I saw it on Twitter as just like a random tweet. There was no source with it, so I have no idea. But I just think that'd be really funny. It sounded funny. I'm like, yeah, that'd be funny.
I already saw someone put him on some like Ukrainian kill list or something like that. Interesting stuff. Again, we're on the internet. We're guys that have no exposure to what's going on outside the world except from what we're hearing, right? Again, it's almost like in this world, and the same thing with the markets. It's always secondhand exposure to all the information that's coming out. We're outsiders, right? It's outsider trading, but at the same time, it's I think it's so funny to see how people react to a lot of things, and maybe none of it is true, right? I think that's the important thing. You have to question everything. But that was a great breakdown. I'm so happy we went over uranium because I'm actually not going to say I'm bullish. I'm not going to say I'm bullish because I'm waiting for a pullback, but might not never come. So we'll have to keep an eye on uranium markets. I want to stay with that because it's really important. I do want to share my favorite tweet of the day. We were doing this last week. This one's not funny. This one's not funny at all, but it's more ironic. And this is from I forget his name. I think his name is Joe Brown. He's from Heresy Financial on YouTube, but he put this tweet out yesterday. Bank stocks are collapsing like it's 2009. Tech stocks are melting up like it's 1999. I don't think there's any better way you can put that in the situation of where we are in this market, right? Um, Literally, that might be my favorite tweet of the year, just because of how accurate and how true it is. I'm looking at the markets right now as we're heading into the close. S&P up 2.7%, 30 for the Nasdaq, 34 for the Dow. Small caps rallying a little bit here. Nothing too crazy, but it's going to be interesting to see. The one thing I do want to mention before we head out is the Nikkei, because the Nikkei is approaching all-time highs. And before we get to that, we'll get to the Nikkei, and then I'll just talk about Tesla for a second because it's kind of funny. This interview that happens earlier today, but I'll send out the link too. But the Nikkei, like I said, approaching all-time highs. We're not too far off. Yesterday, 743 points in that trading session. We're only about 5.68% from hitting all-time highs, and if we get to that point, I think all hell will break loose. Something will possibly break in Japan, and again, the problem is that they'll probably raise rates, which they haven't done in such a period of time because of yield curve control. But the last time that they raised rates when the market was this high was 1989, January 1990. This son of a bitch just went down for 15 years. So it's going to be something that's really interesting to watch out of the Asian markets. But for the time being, what this is doing is it's actually keeping the dollar up because it's just making the value of the yen drop significantly. So if we're looking at the USD to the yen pairing, oh my goodness, definitely the scale is different there. We're getting close. We're getting back close to, this triple top around 151, 152 area. If this continues to go up and we have 5-6% more, I mean, I could definitely see us putting in a pretty good high for the yen. So that's going to definitely help out the US dollar pairs and say if we get some type of crisis in the banking sector, which kind of seems like is quietly approaching us, there's a good chance that we could see the dollar absolutely skyrocket from that. But yeah, that's pretty much it. The thing I was going to say on Tesla was there's a guy talking about how Elon Musk had a great earnings call with Tesla on CNBC, and it's so funny because then the guy I forget his name, he's the host, Jeff something. He said it was a great earnings call, and the guy's like, "Whoa, not great. It just he was there. Elon Musk was there for the earnings call." Like, and the guy's like, "So he was physically present for the earnings call?" And it's just like people are trying to buy the dip and they're trying to justify. And then he's like, "Well, maybe Elon Musk will buy some stock." And then here's the thing, we're just hoping at this point. That's kind of telling you that, okay, maybe I bought in a little bit too high and I'm just trying to bring down my cost basis, but doesn't make a lot of sense for the price to be going up if demand is coming down. And that's something we always talk about. So I'll leave it with that. I'll send out the link. It was hilarious. I had a good laugh. First time I've actually laughed in a while. So other than that, House, thank you for being on here. That was a great episode. Everyone, Randy, thanks for being here. House, you're not in the chat, you're on the screen. Let's see, Ace and Chris and everyone else who watches the playback, appreciate you guys. We'll be back tomorrow. We'll tweet out what time and everything like that. But other than that, take care, everyone. Have a great day, and we'll see you next time.
Take care, guys.